Hasn't done that yet.
Good.
Yeah.
You starting?
Okay, good.
That was funny.
So this class was originally just supposed to be like a Zoom thing, and then I was like, she wasn't gonna be here in person, so we had her in person. So I did do a class with open house. I don't know if anybody was in that class, but we're gonna talk about how to utilize the tools that she's gonna teach during the open house. So that's one thing. But the main purpose I had her come was to talk about the two different basic loans. There's 4 different types of loans she's gonna go over, but the 2 that we're really gonna see the most of. And a lot of agents I talk to have no idea on how to figure out a mortgage payment, on how much to put down, or even what the 4 different types of loans are. So I'm all about adding value. If you can't add value, you're not gonna build a relationship. And our goal is to build relationships. People get it confused. They think it's to try to close. It's not. We're trying to add value to build a relationship, and that relationship is going to get it closed. So that's kind of what we're going to go over today. The main thing we're going to walk away with is how to use mortgagecalculator.org, or how to go through that, and how to talk to your buyer, because a lot of people don't want to run to a lender. They're scared. They don't want to get their credit pulled. They think it's going to destroy their life. It's going to ruin them, and so there's a lot of misconcept, and so she's going to go over how to overcome those obstacles. But before we go over that, we're going to tell some jokes.
Okay.
So I got some real estate jokes. He has one too. So let me see here. Okay.
Yeah, more than one.
He has more than one. Oh, I just had one. Let me see it. Okay. What is a 4-letter word does an agent use when a deal falls through? What's a 4-letter word that they use next? Oh, I said that wrong. Hold on.
Yeah.
We're gonna skip the next
Those 6.
This thinking. So I said, sure, I'll reduce my commission. And he said, every time you reduce the price. Hold on, I got it. Let me look. He has a good one.
All right, come up here now.
He has a good one.
Come up here. Huh? You didn't have a good one?
He does have a good one.
What's in front of you but you can't see it?
Okay.
The future.
Yes.
This is all better than mine. Okay. 90% of people in the world hate wallpaper.
Yes.
The other 10% hate your wallpaper. Okay.
You hate wallpaper if you had to take wallpaper.
Yep. I have a question about the offer you submitted. What? Which half of the home is your buyer attempting to buy? Okay, I'll end it there.
I actually just saw a contract the other day that had half of the property being conveyed.
Half of the property.
Half of the property being conveyed to the buyer, and half saying, so this is not gonna work, this is not gonna work.
How do they do
Right,
it? How do they break
It's a
it?
family kind of passed down. We're gonna have to rework this. So Delaware is an attorney state, so that's actually where I'm physically located, and I call home Delaware, but Florida is going to be my second home, so that's kind of. Jeff and I actually got introduced at the 10X conference, where was it, Miami?
Miami. Beautiful Miami.
Beautiful Miami. So Grant Cardone, I don't know if any of you know him, but he's kind of my mentor. He teaches you real estate, but business, and Jeff follows him. And so yeah, that's where we're at.
Just a little bit.
Now, I don't know how to get my computer up here or anybody to be able to kind of see the presentation.
Grab Ashley.
It's a okay. Amanda.
Ashley. We can. And we were in this office for like a year and a half, and we still found her again.
Maybe.
No, even with the clients, we also
We're little real estate jokers. All right, well, while we wait for that, let's talk about something else. So QR codes. Are you guys using QR codes for your business? Anybody?
No,
You're using them? Oh, yeah. You guys are back using QR codes for your business? Okay. So something, obviously you're going to restaurants a lot and you don't even get menus anymore, right? A lot of times you have a little piece of paper that's on the table and it says scan for your menu, right? Because there's so much information that can be plugged into them. Not only that, but utilizing your QR codes can keep information in clients' contact information, okay? So I actually got a company to give me an ECard. So instead of carrying around my business cards all the time anymore, I'm passing them out, put them in my pockets, they throw them away. I have an ECard and it has my QR code built into it. And I literally can just go up to the back of somebody's phone and put my card behind it, and it puts all my contact information in there. It also helps with clients when I'm out meeting a lot of clients doing some kind of seminars. I can just go up to my card, put it behind their phone, and it puts everything in there. But utilizing the QR code, which I have in the back here. Anybody want to give it a try?
Oh.
Got it? Okay, so tell me what it shows when it comes up. All my info. Yeah, you should go in. So basically, it just comes up with all my contact information. But it also allows clients to hop on really quick and apply. So I'm using this, and you could use it to your advantage. I use it a lot with my real estate agents and the builders that I work with. And while they're out showing houses, they literally can just pop on and look reviews, or if there's a house and they haven't gotten pre-qualified, they just hit. Literally last night, I had a client who called and wanted to put an offer in within 10 minutes. He completed everything online. Within an hour, I had his pre-qualification ready, and they put an offer in last night. That's how fast, accurate, and efficient this process is. So if you're not doing it, I strongly recommend it. It's helping us collect information better, and it's helping you get pre-approvals very, very quickly. Okay?
How much is that a month?
Nothing a month. I paid $500 for the card. They maintain it. I believe there is an annual fee of $99. I can get everybody the contact information for the gentleman that I used. Okay?
So it's like a mini website.
Mm-hmm. Yep. And then my company kind of incorporated it as well.
$500 startup fee?
500. Now, if you have a big group, sometimes we'll give a discount. So for my company, we order 20 or 30 of them. I know everybody's not that big. If you have a big group, you can kind of get together with friends and discounts it to 300. So it's very cool. All right. I am not a PowerPoint guru, but I'm going to work the best I can do this. So let's see from the beginning. I really kind of want to start this off. Let's see. Oh, there you go. It's kind of a mortgage 101. Jeff and I really just talked like on Friday. We wanted to get together and just have me speak with his agents, Crystal and Nadine, and just talk with them through some basics on mortgage 101. And that's what he was mentioning. But I wanted to kind of get it also into a little bit more of the newer things that are coming out in terms of credit. There are some new guidelines that are changing that are going to allow for more homeowners to buy and make the process a little bit easier. So that's the first thing I wanted to talk about. Okay. I'm sure most of you know there is a difference between how your credit score can be pulled, either Vantage score or FICO. It's really hard to read, isn't it?
Yeah.
Okay. I don't know how to fix that, guys. All right, so a lot of times, for example, Jeff will call me and he'll say, hey, I've got a client, they say they've got an 800 credit score, we can get them pre-qualified really quickly, they do Credit Karma and they know what their score is. Anybody heard that before? I heard that last night too. And then I got on their credit score was 655, the one that thought it was in her house. Okay. I have seen a 100-point difference between Credit Karma and actual FICO score credit. Okay. The main difference is those companies use different information. Okay, they pull information differently, and I have a handful that I'm going to pass out afterwards. It kind of, when I'm talking to a client, I see a big difference in what their Credit Karma score is versus what their actual credit score is. I sit down and explain to them why, and I give them documentation to help them also understand. So as you can see here, the big difference here is how they're looking at credit history and also tax liens. Some companies pull them, some do not. Obviously, when you're going with a mortgage loan or a car loan, something like that, they're looking more deeply into this information and what Credit Karma is allowing them to see. Credit Karma just kind of gives basic information. Also, something useful that most people don't know that you can tell your clients. They say, I don't want to have my credit pulled. I had my credit pulled 2 weeks ago with another company. I'm uncomfortable with that. When you pull credit for a auto or a home loan, there's a 45-day window from the day that first credit is pulled that you can have other companies pull the credit. Okay, that is done so that you can shop for a loan. All right, so if you have a client that says, you know what, I've already applied with Rocket Mortgage, they said I'm fine, guess what, it's not gonna hurt your credit score at all. It will not change it one point. Once you've had that initial inquiry, you have 45 days to shop at that same type of company. Okay? And that goes for all the loans. If you've ever purchased a car and then had your credit checked after and you've seen 25 credit checks, that's what happens, okay?
So it starts from the day that they first pull the first one, or is it at a third? Okay, so 45 days from that day.
45 days from the first inquiry.
So that first inquiry is gonna drop the score a little bit,
Yes,
but the second, third, fourth, fifth, whatever,
doesn't matter.
doesn't matter. So the score that they see on Credit Karma versus the score you see of Peter Food scores, the score that they see on Credit Karma will keep going down. Or
It could go down throughout the process.
throughout, because it's not, it's good, but you're looking at a different one, which doesn't go down, because you can see, can you see the other mortgage companies that they're applying to, or whatever? I think I asked this question before, you can't see who they are, but you can see what service they're using to process the request.
Okay, that's a great question. So, and a little bit of it. So yes, to answer the question, the first person that pulls the credit, if they pull something for me, I will see the inquiry, who they are, what company they possibly pulled it through, and we ask the borrowers to explain and confirm if they haven't opened anything along the way first. Second off, we do not do, at my company, we do not do soft pulls, which is basically like an updated credit pull within 10 days of closing. That could change in the future. Okay, policies change all the time. My old company, we did do that. Once we pull credit, our credit report is good for 120 days. Okay, so we expect people to be honest, they're applying for a home loan. If they open something, we expect that they tell us, we'll talk about that throughout the process. But we would not see if they're continuing to shop after we pull our credit report. Okay. Next thing I want to talk about was the credit simulators. Has anybody experienced any kind of credit simulation with a client?
I don't know what that is.
Alright, so when I pull credit, unless I'm seeing like 800 credit score, I always pull a credit simulator. Okay? Credit simulator is right through my credit company. It's from after I pull the credit report, I can go in and ask a simulator to calculate within 30 days how I can improve the credit score. This has changed the process for so many of my clients, okay? Not only in the application kind of phase or pre-qualifying kind of phase, if you send them to me early enough and they have a little bit of dinged up credit, I can within a month usually increase their score.
Oh, it's like a reboost. So simulator is like a reboost.
It has 96% accuracy, okay? So it will list what we need to pay off, and it may not even be a whole time frame. Sometimes it's pay this down to $1,037, not $1,038, not $1,039, an exact amount. Okay? I ask the customer for a receipt after they paid the item off, paid it down to whatever needs to be paid off. Then we send it directly to the credit bureaus. Within 7 days, they have this processed, and then they pull on credit report. Now, mind you, we're not going to get hit again with another credit report thing. We've already hit that 45-day window. But this gives us the ability to increase their scores very quickly. Gives them better interest rates, better mortgage insurance pricing.
So, when you look at it again, it's not gonna be like you looked at it the first time, it's not gonna.
Exactly, because we already hit it before we got there.
One question I forgot to ask, I know the top row, but who's new in real estate? I know this guy, who's new in real estate? You're brand new. Have you, has anybody done a deal yet? Have you done a deal yet? Have you done a deal yet?
I'm brand new.
Okay, I forgot to ask that. The reason why I asked that, because I really, and so are, my people over there, well, Crystal really doesn't count, but like, so, because I really want this training is for brand new and seasoned and really old, that guy's in the other room. So, I'm gonna ask her questions that I want my people to write down and I want them to understand. Because when you're talking to somebody, and if you're not able to understand, like if you don't understand it, ask it. Because if you don't understand it, you're not gonna, our job is to give them, answers, solutions, overcome hurdles. We have to give them information, and then they base a decision off that information. We don't make a decision for them. Our job is to give them information. So when you're talking to them and you're asking them, how much do you want to, which we're gonna do a role play with this, how much do you want to spend a month? We're gonna walk you through on how to handle it, you know, so I might have her break some things down, knowing that y'all are new, so you really get it, because this is where you're gonna succeed. If you do not know how to do this, which 85% of realtors do not know how to talk lender talk, they're gonna meet someone like me that does, and then you're not gonna hear from me. No offense, but I'm gonna say, you want the best tool in the toolbox, you want the person with the best tool in the toolbox, and they're gonna say, well, you have the best tools. So I appreciate everybody coming, you're taking time to grow, you know, so I really wanna make the best of it.
Thank you. And that's important, you know, so sometimes I start talking quickly, so just hit the brakes on me and I'll kind of go back and do a touch point on that. So we can actually role play even something as basic as I don't want to have my credit pool. If any of you want to do it in private also, we can do that. We don't work with the time. Okay, so just recapping. I always tell a client, there's a big difference between us pulling your credit and what you see in the credit card. Okay, so it's best to know in advance what you can afford and what your credit score is before we take you shopping.
One thing she said she doesn't pull the credit again. She doesn't pull the credit again. So they pull the credit, they get pre-approved, not pre-qualified. That word, I know she has it up there. A lot of times people don't understand pre-qualified. Pre-qualified means it's just words and a lot of other things, but pre-approval is really what you want to have. That means they ran the information. Her pre-qualified means they ran information, but that word, if you look it up, it actually has two different meanings. But going back, let's say you have a buyer and they have different lenders. A lot of other lenders pull that credit right before closing. So, you know, it's rare that they don't. So that's kind of good. Sometimes it's good because the score might go up, like in Shrewsbury.
Absolutely.
I don't know anybody that does, like, I haven't heard that before. I thought they do right before closing, they check it to make sure you didn't buy a car. And then, so that's
Is that what you call a soft
That's
pull?
what's called a soft pool. Okay, now I have heard some whispers about possibly some more regulations even coming out of my company for only conventional loans for soft pools. Basically, it's just a update within 10 days to see where people are, if they've opened anything. But honestly, even if you don't put that system into play, we do what's called fraud searches for every single client. Every mortgage company does it, and that also shows that inquiry. So it's really not an inquiry. If somebody pulled credit and had something wrong, we're gonna ask them about it. In the start, when we're first starting and we're talking to people, we're like, don't pull credit with a bunch of companies. Obviously, we want you to have the best rate around. We're gonna do that for you. We're not purchasing cars. We're not going out furniture shopping yet. We're gonna pull off all of those things until we're done. No large
Don't co-sign,
deposits,
don't.
no co-signs, anything like that. Yeah.
About furniture shopping stuff. So even if like, you know, if they're like trying to buy furniture, but it says no, first payment isn't for like 6 days or something, that's doesn't show up on the first payment.
Absolutely.
It'll show up as like an open line of credit.
Yeah, it will, and then they end up having to get us documentation to show how much the minimum payments would be, depending on, because sometimes it's not available yet. So that could be something that holds up the process, and honestly, I didn't give you guys kind of my history of what I did before, but I started off in law, you know, talk about that a little bit. And then I got into the mortgage business, but for 10 years, I was behind the scenes fixing all of the loans where loan officers weren't directing their clients properly. So that's where I've learned to come in, and when I'm talking to clients, I'm saying, do not do this, do not do this, I give them a list, these are the things we're not gonna do. We talk every single week. If you have any updates, if you have large deposits, if you need to have your credit pulled, you're calling me first. We're not gonna have surprises along the way, okay? You guys have questions?
Not yet.
So, just to hit on the second point again, because I went quickly, it used to be 30 days. It used to be 30 days that you had that window to shop, now it's
That's only auto and home.
okay. I will see it, they, Victoria's Secret, JCPenney, you name it, I've seen it,
Uh-oh.
okay?
Yeah.
So, and then the next topic, the credit simulator. Honestly, I feel like this is one of the biggest tools in my toolbox, okay? I've even had borrowers that had 720 credit scores, and I've increased them over the 740 mark to get them the very best pricing. Okay, within their closing time, they could purchase a home, but they're gonna have a little higher interest rate. So 740 is where a borrower's credit score hits the point where they get the best price. 740. And that was just. Okay. 740 is that median score. So you have 3 credit scores, okay? You take the score that's in the middle, that's the score that we used based off their entire month. Now, just 2 weeks ago, new policies came out. I don't think hardly anybody knows about this. New policies just came out. You have 2 borrowers. You take their middle score for Fannie Mae only, so that would be a conventional loan, and you can make a median of that score. Okay?
How do you do that? You
2 borrowers, they have 3 scores each. You take their middle score and average the 2, and that is where we're going to base.
So give us an example. Like,
So,
so they both have, one has a 590, well, let's talk
The
FHA,
husband has like 700 score and the wife.
and the wife has a 590. That would, so they're not gonna go with the lowest score, they're gonna go with the median?
they're going to go with a median score between the 2 for Fannie Mae only. What's our internet here?
Wilbur. And the password's similar.
This one?
Yes.
And what's the password?
And Seminole, all lowercase. SEMINOLE. Is that right?
Look at that.
Whoa.
Remember it, I can't read or write, I can just talk, might be wrong.
Okay, so say we have 710, 720, and 730. We get on?
Yeah, I think so.
This is really blurry. I'm sorry, guys. All right, let's see if I can't find the policy updates because they have examples on there.
I might be able to fix it. I know we have the same one now.
Okay, good.
What's the focus?
I'm gonna try and focus you, so bear with me.
Come on.
Can you make it bigger?
I don't think you can make it any bigger.
Listen.
Hold on,
These tables aren't blocked.
I'm trying to.
Yeah, I like that, thank you.
How's that?
Yeah, that's better.
So make sure we get.
Oh, yeah, that's better.
Yeah.
There.
Much better. Okay, awesome.
You're welcome. If it needs to be done again, let me know.
Go back. Technology challenge. You have paid and
Tell me.
Okay, so here's a great example, right? You have borrower 1 with these credit scores. 619 for a conventional, 620. But you have your borrower 2 with better scores. Okay, we can take them Fannie Mae and average these middle scores together, get 656. And we'll base the approval off of this. We'll base the mortgage insurance off of this score. However, we cannot base the interest rate off of that.
That's it. So
This is new, like 11 days ago.
that's a big,
Is that just
Take
income
a
or
picture of
everybody?
that's the
Beverly
laws,
Repeat that.
that's the laws.
That's a law.
Well, I mean, so that's a regulation. Before, they had to go with the lowest credit score, so if one had good, and then the wife had it really bad because she spent all the money on credit cards, and the husband did good and didn't pay the bills and everything. No, I'm not saying anything, but they would go with the lowest, score. This is a game changer. So what's the score you need for conventional?
So for a conventional, it's 620.
And you really want someone to go to conventional. And the reason why she's gonna go with the is the mortgage insurance will drop off versus refinance. Do you know what that means? Mortgage insurance will drop off. That's a big
We'll
deal.
go into this. This is a game changer.
That's
Okay,
huge.
this is really, really big.
A lot of people should be getting it. So what about FHA? FHA is not there yet.
FHA is not following this, Freddie Mac's not even following this yet.
Second
Okay?
question, what's the minimum score for an FHA? 620 or 590?
580.
580? Okay.
But it's lower at 10%.
Which is rare, because if they're doing that.
They're never, you're not even, I don't think I've ever run into somebody that had to go up to 10% down, but if you did, I think it's 500. Really low, but they usually don't.
That's a big deal.
Okay. So what is the benefit of this? Basically, we're helping additional borrowers be able to qualify. Okay, this is, I'm maybe one of your people.
No, I read it, thank you.
The two borrowers, is it like, it's mandatory if they're married, because they told us.
Oh, that's a good question. So it could be, they don't have to be married, they just need to be on the loan. Father, daughter, whatever.
They're on the same loan application. Yeah, this is.
I wish this was there like 60 days ago.
Just happened, Chad. I'm giving you the latest and greatest. You can't complain about the past, you can only fix the future.
I have a buyer lead moving from California to here in Orlando. Self-employed, so when he moves here, he's not gonna have a job. He's selling his house out there, so I'll have $300K in the bank, but no job when he moves. And so like I gave him a lender's number over here, they talked to him and basically never called him back. He's pretty much stuck until he has a job, right?
Nope, you're definitely gonna talk to them, and she is gonna build a path to success.
I will build this past.
That's
We'll take
exactly,
it.
that's what she's gonna
And
do.
we'll take it. Okay, so I say a lot of big names. Conventional is the best process. You can take a borrower than any road, the best ones. You're gonna get the best interest rates. There's advantages with mortgage insurance. You have less down, okay? There's two types of lending with conventional, it's Fannie Mae and Freddie Mac. This guideline is only allowed with Fannie Mae right now, okay? Usually they start piggybacking off of each other. They don't want to have an advantage over the other. This is a Fannie Mae.
What is Fannie Mae and Freddie Mac? Because that's the government,
That's
right?
the government.
So there's two entities in the government, and they're on opposite sides of each other? Like, why is there
It's
two?
like a competitive kind of thing.
Who
They
runs
can't have a
that?
monopoly.
Yeah, can't have a monopoly. Now, an advantage of Freddie right now, that Fannie hasn't caught up with, is that with student loans, in the past, with conventional loans, you would count 0.01% student loans, the balance, to a monthly payment. So if you have a borrower that has, I have a doctor right now that's moving from San Diego to Baltimore, and he's got $300,000 worth of debt, and he has no payment due right now, right? And so with Fannie Mae, these are credit credits, so it doesn't matter to us. With Fannie Mae, we have to count 0.01% of the payment into that. Which is a pretty hefty payment when you go into a $300,000 worth of debt, right? That's a mortgage payment, basically. Freddie allows for half of the 1%. Okay, so it's an advantage there. They have their differences there. They usually end up catching up with each other pretty quickly.
Is that if they haven't, like, if it's not, like, just for home school, or if they already have that, they just have to pay it,
Yeah, if they haven't even paid it, they haven't even been obligated.
what if they have?
So if they've been obligated, sometimes you can go back and renegotiate with the credit company, the Department of Education, and sometimes they'll lower it, spread out the amortization period of the payments. Sometimes we can do that. There's a lot of little, there's nooks and crannies.
Aren't there special loans for doctors though?
There are, yeah, I have one actually. I've only seen one doctor take advantage of it.
I have my cousin, did a loan like that, his doctor,
Did it?
and he told me about that.
Yeah, I just had someone inquire about it 2 days ago. I haven't talked about it. I always feel like I have to go in and research those, like, really tricky ones a little bit. But I get these alerts where these kind of things come through, and I think I was on an airplane last week when it came through, and it just excited me. I'm like, oh, this is exciting. I'm weak.
I have a question. Okay, so FHA, you said something about conventional, best, lowest interest rate. FHA normally had a lower interest rate than conventional. So you're saying conventional now is the same, if not lower?
They're pretty competitive.
Before it wasn't like that, right? Before COVID, pre-COVID, it was different. Okay. I mean, I'm saying this because if you talk to someone and they've been doing, you're like, wait a minute, no, that wasn't the case. Normally FHA, government insured loan, mortgage insurance come with it, you got a lower interest rate. Not by much, but you had an opportunity.
That's like, but you gotta also take into account mortgage insurance too.
0.85,
95%.
which she's gonna do it because she's gonna do it for us, but she's gonna show us how to figure that out.
And also where I showed you the QR code, and I'm gonna go around and put it in everybody's phone. When you're showing it to customers, they can actually go through and you can go with them, you calculate what your mortgage payment right now.
Oh, you're out?
Yeah.
Oh, I was using something else.
Is there a minimum for like a VA? Or is
Say that again?
Is there
that
what?
VA, for like VA loan, is there like a minimum score? Or no?
There really is no minimum score for VA. There's no money down required. They could do 100% loan to value. Yeah, it is. Very.
Does everybody know the 4 loans? Does everybody know the 4 loans?
Aiden said he doesn't.
Okay.
You got
Beverly, say the 4 loans, just,
we've got
there's only 4,
USDA.
there's only 4.
USDA.
And what's that? Rural payment,
So basically USDA is a fraction off of FHA. They follow FHA's guidelines. Okay, so very government compliant, extremely strict on income and assets. We underwrite the file, then we have to send it to USDA for correction.
and the other 2 things, USDA, there's only a couple areas, Farm City, Palm Coast or Palm Bay or something, Davenport, Lakeland, you could do USDA. Now, there's a lot of listing agents that don't know what they're doing and they put USDA down.
Oh, really?
The big difference between USAA and FHA is the mortgage insurance. I've done a lot of USA deals. So when I see that that's available, no money down, and the mortgage insurance is 0.25, so write that down, 0.25. FHA mortgage insurance is 0.85. That's the number one thing you need to remember. So if you USDA is 0.25, so that could be $100 lower payment just because they're getting that type of.
And FHA is 8.5?
FHA, 0.85.
So there is a
That's
website,
the insurance.
Mortgage insurance,
mortgage insurance.
not homeowners insurance. We're not talking about homeowners insurance. A lot of people get that confused. We're talking about PMI, mortgage insurance.
Okay. Kind of hopping around. with
Sorry.
that.
I want to make sure they get that.
No, that's okay, there's a lot to learn, and listen, guys, I would like to eventually, this is kind of like a practice class here, this is my first one, but I would like to eventually do classes once every 2 weeks, so we kind of build on this. This is not something you're gonna remember, you're not gonna carry around your notebook, and you're studying this, and you get out of here and life goes on, okay? It's something that you can learn.
We're gonna call you every day.
But you can call me every day, but you'll become knowledgeable, where you don't have to say, let me ask my lender, you'll start to know the knowledge to be able to, at least the basics, okay? If we're gonna go off into the USDA kind of zone, there is a website, you can just Google it, USDA property eligibility location. It'll take you to the map. You put the address of the property in here. Hit go, it'll tell you green means yes, red means no. I have literally had houses on one side of the street, directly across, on the other side of the street, one is USDA approved. There is maps, set off the location, you're not changing the location. They do. They do, they do income things around, it's basically for lower income families, okay? They can, if your purchase price is $290,000 and your value comes in at $300,000, your appraised value comes in higher than the purchase price, you can bump the loan amount up to the appraised value. Not with USDA, not only you're doing a loan, you can include the closing costs. into the loan.
Yes, so explain why you want to do that.
So when they come to the village, my closing costs.
Yeah, because it's in
Included in the mortgage.
You would have to ask the seller, negotiate that with the listing agent. The seller's gonna find out that the property appraised $6,000, $7,000, $8,000 more, but at the end of the day, you agreed on a price. So sometimes that could backfire, but the seller has to sign off on the addendum saying that, hey, well, because it's gonna change the purchase price. The purchase price is gonna change to $256 instead of $250. You're gonna say, I want $6,000 back towards closing. So this, you just have to be careful how you negotiate that. And then if you are in that situation, call the lender, or your upline and say, how can I work with them?
Yeah, so that's a unique situation, we do have that happen, it's not always at 10,000.
I've used it. I've done it.
3, 4.
I've done it.
It's great sometimes, and these borrowers are ones that are cash poor.
Yeah,
So
they
it's
don't
the
have,
max income? What is the
And
maximum
it
income?
depends on the location.
Oh, it depends on the
Yeah,
location.
and so there is, besides this property address search, there's this income eligibility search here.
there's an income eligibility for USDA.
Absolutely.
No, I didn't know that.
100%. And there's a lot of caveats that go into that,
So on the same website, you can do the
Yeah.
income.
Yeah. Now, this is, like I said, this is one of the strictest programs around, okay? it really does look at every penny. What county, Jeff? What county?
A little bit of a drive.
Okay,
It's very rural, that's where Davenport on the line.
Yeah.
okay. They look at every penny coming into the household. Every penny, they're looking at how many people are gonna be living in the house.
So not just on the loan,
Huh?
not just on,
No, it is who is gonna be living in the house.
So if you have a family of four, you put in four.
If you have other loan moving in. if you
So the more
have-
people, the better.
Well, it's more money coming into the house, which
So you mean the more
would
people,
actually disqualify them probably.
yeah, so the more people living in a household, the more income you can use to determine eligible.
Which could probably.
Right.
So is there a maximum amount you can make for USDA?
Okay.
Like, can you make 100 grand a year?
It's gonna depend on the property location.
so
So there's also things.
So everything's dependent solely on where the property is located.
yes,
Literally everything.
Right, so if you're taking somebody shopping and you know that they're USDA approved, you can do a Google search of, your MLS, find the right properties, make sure it is really secure, like Jeff was mentioning, sometimes they're really not. And then we go to this drawing board. I mean, there are, if they're having adults live there that aren't bringing in income, they do have to certify it. They have to provide us their tax returns. Okay, that is really strict for you too. There's also, there's some credits available if you have disabled persons. There's some things that are for child credits if you have daycare expenses. Usually these are kind of younger families who can advantage of this program that can help them with child care expenses.
the way that I want my team to look at this is a tool in your toolbox. I had a buyer, she wants $1,000 payment. I have a buyer, she wants a $1,200 payment. My next question is, where do you want to live? I'm open. So what does that tell me? Hey, let me see. So again, my buyer's $1,000, $1,200. I don't have a lot of money to put down. You have closing costs, you have down payment and closing costs. Oh, you know what? There's a $180,000 home. It's USDA eligibility in our city, It's a beautiful home. So also, what we're trying to learn here, it's a tool in our toolbox, because we have, our goal is to provide a buyer with solutions. I only can do $1,200 a month, and I only have $8,000 to put down and for closing costs. Okay, so a lot of agents would just check that off and say, hey, this is never gonna happen, but not me. I would go, and I did it, and I said, and we actually, she bought the house for $3,000. No money down, and I negotiated closing costs, and she only had to put, the $3,000 we put down for escrow, she said, sure, keep it, because it's just like VA. I know I'm kind of getting off topic, but, that's how I think about it. Does that make sense?
Yeah, this is a great tool. If you're focused on low income kind of families and you have a certain area that you wanna, I think of myself more as a general practitioner because I've been doing this for so long.
I wouldn't say low income. I wouldn't say low income.
Fixed income person, I guess.
I wouldn't say fixed income, because if you say that to a client, that
I'm
might
not
think-
saying, I'm just talking about in general, this could be something, someone like, someone's retired, okay, and they wanna live on acreage, and they just wanna retire and do their thing.
But they have a
They
small
just have
budget.
social security,
Yeah.
this, that,
This is it.
that's
This is it.
Because these homes are nice. These homes,
Yeah.
Oh, yeah.
the four I sold in our city with USDA loan, all within like a 2-block radius, they're all referrals from each other.
Yeah.
Ken bought it and then told Sharon and told Carrie and then,
Yeah, absolutely. I would say this is something that when you send me your clients, I'm going to be holding their hand throughout the process.
That's good.
Not only am I saying, we do that with every client, but this one is the strictest. So
okay.
not only are we seeing credit, we things, we accounts. This one, I'm saying, do not deposit $2 into your bank account till you talk to me, unless it's critical. I'm not kidding you. Do not do a Zelle transfer. Do not do a Venmo transfer. I don't care what it is. If you have $2 in your pocket, you've got to put it in your bank account. Go buy your pack of gum or your coffee with that, and do not deposit it.
That's like $4.
Okay.
off from things.
Yes, well,
I'm joking, so.
if you're going to 7-Eleven, I don't know who sells $2 coffee, but you get my point, okay? Every penny is valuable to USDA, every penny. So if they see anything outside of payroll, they will question it, you have to source it, okay? And that's why I say, please do not put anything in there. Buy your gum, buy your pizza, buy your gas, buy your whatever cash incidentals or mattress money that you have laying around, I don't want to see it, okay? So that kind of basically covers the asset portion and the income. So they see Zelle payments coming in, they see Venmo, and where's your asking questions.
I always told you it's like candy or gum for my money.
Hey, you're not allowed to pay candy for volunteer.
What do you say?
He says, you don't want me to buy candy or gum with my money.
Smart.
Mm-hmm.
Use other people's money. Someone else says that all the time. Use other people's money.
Okay, so this is USDA, right? We were kind of getting into the 4 different loan types. USDA. This is basically a step off of FHA. FHA will be the next best program if you have a house full of people and there's lots of income coming in. FHA doesn't care about the other people's income. As long as you have a borrower to qualify or 2 borrowers to qualify, they're good. They're not asking how many people are going to be living in the house. However, with FHA, it's 3.5% down plus closing costs. The
3.5%
difference
down.
is, this could be
Plus closing costs?
plus closing costs. This could be virtually no money down. So like I said, with this one, if your appraised value comes in high, you can renegotiate, increase the loan amount, and roll all your closing costs into the loan.
So USDA, there's no down payment then?
I mean, you still have to put an earnest money deposit down, contract completely separate.
Yeah.
Completely separate. Yeah,
You can, the point on what she's saying, any home that over appraises, you can take that money, if you can get away with it, and use it towards
Use it towards
closing
your
costs.
closing costs or use it
Correct.
toward renovations or?
No,
You can't use it toward,
just
just toward closing costs.
correct. The
So
seller
it was-
cannot give you any money for anything except what's on that ALPA or HUD or closing expenses.
but with this one, the benefit is if it appraises for enough and you can roll some of those costs in, you can look like, or we together can look like such, power players to the client, right? We can help them get their earnest money deposit back. We can even help them get their appraised money back, money that they paid for the appraisal. Right? If the house of value, if you do your homework and the house.
Oh, you can use that towards the appraisal.
You can pay them back for the appraisal.
So, when you renegotiate that, they're like, hey, this $6,000 I thought I had to take for closing costs, I can keep that in my pocket and use the 6,000, and put the $6,000 on the loan.
It's fun. I enjoy that kind of aspect. The most fun client for me is the one who nobody in their family has ever bought one. This is the memorable ones, the ones that are like so thankful to meet free guests from mom, dad, and uncle, and like over here, and you're hopping aboard and you get to the end, it looks like it's a little bit, it's just kind of fun. That's why I do it. So FHA, we were talking about 3.5% down. This one, I know you kind of set that for a minute. FHA is 3.5% down for your purchase price. So if somebody was buying a $100,000 house, they have to put $3,500. That's their skin in the game here, plus the closing costs. And that's where you can come in and ask for seller help. That's not huge right now.
FHA, you said?
FHA, yeah. You're not always getting a lot of seller help in this market, and I do see it. Jeff's negotiated seller help. 6% seller help.
Up to 6%. Up to, I say this and it's a ballpark, she might disagree. So again, value, tools in the toolbox. When I'm talking to someone and they don't know what their payment is, I'm jumping up and down because I know that I can add a lot of value. Hey, what do you want, Nadine sees this all the time. I don't know, well, how much do you, so how do we figure that out? Your money down, 3.5%, I don't have a lot, 3.5%, and then what's my closing cost? Well, how do you know how much closing cost is? The average I use is 3%. It could be a little less, it could be a little bit more. Now, before the market crashed, the closing cost was 6% because the lenders were thinking big time, if I'm not mistaken.
We're not gonna get into that, yeah.
So- 3%, those, you gotta remember those numbers.
Okay, so take that, if you have somebody doing an FHA, 3.5%, right? We have $100,000 loan amount, we have to put $3,500
Down.
down, okay? okay?
And the closing costs.
Plus their closing cost of 3% would be another.
Is it always 3% for closing?
Give or take.
Give,
Okay.
that's a good estimate.
It's just a good rule of thumb,
That's
for
a
telling
good
them
rule of
something
thumb.
to account on.
Because they can't make a decision if they don't know how much money they need. They can't make a decision if they don't know how much money they need. And it's our job, not the lender's job, at the end it is, but they won't get to them if we don't explain that it's a good process. And that's what we're overcoming today, is what to say.
Again, guys, this is a lot, so if something little comes into your mind, if you don't think that it's a dumb question, please just ask it. Okay, really honest. Okay, so FHA, this program does not allow for higher debt to income ratios. This one, I generally see pretty much cap off at about 36% debt to income. Okay. FHA
So
can go up to 60% debt.
explain that, what that means.
Debt to income is when you take the borrower's proposed monthly mortgage payment. I'm using rounded numbers. This is easy. Say their mortgage payment's gonna be $1,000 a month. Okay. Say their credit cards are another $500 a month. Then they have an auto loan for another $500 a month. Okay? You're gonna take that proposed monthly payment. You're gonna add in all of their monthly expenses that are recorded on credit. Their auto loans, their credit cards, all of those things, and divide it by their monthly, gross income, their revenue for the household. And that's how you figure out debt to income. USDA is stricter. They do not allow DTI. FHA gives you more wiggle room. Okay, so that's where if they have a little bit more money down, but they have low credit scores, higher DTI, we're gonna lean them towards the FHA.
So 35% is pretty, so USDA is harder to get if it's a
It is,
35%.
yeah, it is.
Wow, so, okay.
There's areas where you can get a refer eligible. A refer loan is basically the underwriter has to manually underwrite the file. Okay. With USDA, that would be, we only need to manually underwrite the file, but USDA would also underwrite the file. It's deeper look. Because of that, they want to see more money will be saved and set aside in case of an emergency. They want to see that perhaps their monthly rent compared to what they're going to be paying for their mortgage is going to be more than 10%. They're going to be looking for ways to make sure this borrower is going to be in a safe place to buy this house, and they're not getting. Okay, FHA allows for more room. Okay, FHA is much. Anything else from that? So we talked about USDA, talked about FHA. We have conventional, Fannie, Freddie, that's what we're talking about.
What-
Credit scores.
One thing about FHA, your mortgage insurance, it sticks.
Does stick.
So go over why it sticks.
Where did my one little? They have to refinance to get out of their mortgage insurance with FHA.
Does everybody know what refinance means?
Yeah.
When I explain this to a buyer, I say it's like buying a house over again. Because when you say refinance, it makes it sound easier than when you did when you buy the house, but it's not. Your credit has to be perfect, your debt to income has to be perfect. You can't have any credit cards maxed out, or clothes, or furniture, or shoes, or whatever else.
So if you're doing a streamline, there are programs like the FHA and the VA that are called streamlines where we can refinance them and get their interest rate down, and we don't look at anything other than have you paid your mortgage on time, and then your job.
People with credit.
2 years. Pull their credit to the mortgage only credit.
Oh, is that new? Oh, that's good. So it is a little easier.
So it is easier, so if you had
Okay.
someone that came in that didn't have great credit scores and, you know, with the rates being so low as they've been, I could come in later on, so you call your clients in your database once a year, and you go back 2 years ago and say, hey, let's just check in on these people because we're gonna save time and money, right? And you call through and you say, hey, I noticed your equity's up, perhaps I could get you back in touch with Deb, and she could take a look and see if, you paid your payment a little lower, if you're planning on staying there for a few years. not only are you staying top of mind, I'm helping them get their credits, their monthly payment down. And then maybe that's a nice place where you can talk about, it's all about the future investing. You can work on buying another house in the future, how the house going in, maybe come turn into an investment. And we can refi them now, get the payment down. They stay in that payment for 6 months.
Talking about lending and qualifying and all of that, does your lending institution, do you lend to employees of cannabis companies?
Wow, I know, I agree with you. I've been reading those on the, it is a little bit frustrating. And actually, if I had my way, that's one of the things that I would like to have changed.
But the employees are W-2 though.
They are.
Yeah.
They're not working
They're not
on,
lending-
because
they're not-
I came from medical marijuana, I came from a dispensary, I used to manage and run a dispensary, and one of my old managers too went to go buy a home, make decent money, his wife's a corrections officer, they make plenty of money, they wouldn't count his income because he works for cannabis.
Why? Because it's federally funded.
It's federally illegal, and banks are funded, are by the FDIC, which is federally,
Exactly.
I know, but
That's fine, so until there's a change.
what about the new banking law that banks are gonna be allowed to work with cannabis companies, is that gonna change on the lending side as well?
It still kills me.
So-
Marijuana's been legal in Washington the longest. Like, you don't hear that. It's been illegal in our capital
Yeah.
longer than anywhere else, yet it's not federally legal. Like, that's
Washington DC sends cannabis monthly to certain people in the United States.
Yeah.
They supply it to them.
So
it's a matter of time.
Todd, I don't know if you've heard about this, this just came out about 11 days ago.
Okay.
With Fannie Mae only, they're now allowing for, if you have two borrowers, to do a median score between their middle score to help qualify. So
Yeah.
with Fannie, you know, we have a
Okay.
620 score.
Yeah.
Now we can take the
You
average.
got a 619, 693. Yeah, that's good.
Okay, so just the basis of this is that it does not go off of the interest rate. The interest rate doesn't base off of that. However, the automated underwriting system
Right.
will pick up automatically the median score and 3 of the mortgage insurance companies.
You gotta use both incomes still though.
Huh?
Like, if you gotta use both incomes still.
Yeah, absolutely, absolutely. But this is kind of cool.
Yeah.
Something new just came out.
Did you know that, Tom?
I didn't. I was listening.
He didn't get that outline.
I just found it today too, so I can't. But one thing I wanted to say is, you can't use the income from the cannabis, but another thing about refinancing, you have closing costs.
Yeah.
So, and she'll break down what closing costs is, but if we can eliminate that whole factor by going conventional, that again makes you look, you're adding value. If we can do conventional, we can eliminate that one roadblock, but don't make it sound like FHA is, the devil or something, because that might be something they have to go with. You just want to be able to give them options. And what I like to say real quick is a person, you want to tie a personal story to it.
Right.
I came into work late, Todd beat me up, so I don't come into work late again. But with the mortgage, the lender, me and my wife, Crystal, trusted, her name was Jen, not the other Jen that I used. And she got paid differently. She either got paid on the rate or something. But I had enough money to buy out the interest rate. I had enough money to put 10% down. She knew this, and I felt like I could have got a conventional, but she's like, nope, FHA, and like, when because I was a new agent, I didn't know, I was like, the first 6 months, 7 months, whatever, I got my license as my own agent, but I'm like, I felt like if my agent, myself, would have told me the things I know, and the lender I was working with, I don't know if it was a different structure back then, but like, knowing what I know now, I know there's a good chance I could have got a conventional, and every time I make my mortgage payment, I see that $130. Or actually, I think it's on now, but
And we bought our house 5 years ago, so our value has 100%, gone up, so we don't have, so we wouldn't, the mortgage insurance is almost like, we get letters of eviction all the time, like it's.
I think it actually disappeared. I was gonna talk to you about that later, but the point I'm trying to make is I attach it to a personal thing, and then they're gonna remember that, hey, he's really looking out for me. He's wanting me to get the best option.
I mean, our house right now, we did refinance out of private money. We bought it private back in 12 and did refinance in
What do you mean private?
private. We're hard money.
Okay,
We're coming out of something else.
you all know hard, so
12%,
hard money is
no,
not,
10% interest rate.
hard money is not one of the 4% or 4 loans, right?
4 loans, it was private money. We were having
So
friends
that-
loans the money to buy the property.
That's a part.
So private money's not there. But we did a refinance and it was cheaper for us to go FHA on the rate than it was conventional, even with the mortgage insurance on there. And I refused, I'm sitting with 40% equity or 50% equity in the house. And it was still cheaper even with the MI on there. And even today, we refinance, it'd still be cheaper.
Yeah.
Because we're at 3.25 on 15, so it's like.
It could be, and that's where you have to have a loan officer that's willing to spend time.
Yeah,
I've worked with a lot of loan officers, and they get comfortable and complacent, and they just want to take them. Do this, it's easier on me, you know, and not, you don't sit there and look. I will say that's probably, something that kind of just takes me a little bit longer, because I'm gonna give them the best. And this is something they're gonna be potentially in a home for 30 years. I don't want clients to come back and go to me, I wish Beth would have done this, now I know, I don't want that feeling. So I do like to take my time and kind of.
I stopped using them. Within 6 months, I met Steven, and Steven opened my eyes up to a lot of new tools for my toolbox. And that was a game changer and allowed me to get more
I
business.
feel like I need a toolbox. Carry around on my hand out a screwdriver. That'll be a little problem. Okay, anybody else have a question? So we talked about Fannie, talked about Freddie, there's really conventional, and then we have VA. Okay, so when you send me a veteran, the first thing you do is just start asking questions. I ask what branch of service they were in. And the first thing you do is just kind of confirm service. It's really, really important for veterans to care about.
That's exactly what I was
take
gonna
care
say.
of us. And the first thing I'm gonna do is stop and thank them. If you see someone walk by with even a camouflage book bag, yesterday we were in Animal Kingdom. First thing my son said was, "Thank you for service." And what did that answer to him? We did, I didn't hear him say that. What I heard him
That's good that
say,
he's honest.
yeah, what I heard him say was, "Don't thank me, thank the guys that are still out there." That's what I heard.
He's got limited hearing.
He's my middle child, can you tell? But yes, you know what? So with them, basically, we're trying to get them 100% finance. We're trying to get them in their closing costs. I have a veteran right now that wants to move from New Mexico to Delaware. I was talking to her last night. Her documents are really old because she was in the Air Force long before I even thought we were allowed in the Air Force. She was. And so we are pulling her certificate of eligibility from the VA. With newer veterans, people that have been in, the program for like for the last 15 years, it's really quick to pull their eligibility online.
Do you need the USD or?
DD-214.
Do you need that?
Give us an older veteran.
It's a little-
We actually ask for it for every veteran.
Do y'all know what that is? The DD-214?
DD-214 is
So that, go ahead.
it basically just shows what the history was with the military, what department they were in, how they were, how they were discharged. Sometimes you see some funny stuff.
It's important. You can't approve them without it. And some people don't have it, so you have to help them track it down, so if someone says they don't know what that is, then they might not be telling the truth about being in New York.
Yeah, absolutely. And there's always, oh no, did it die? Can I steal Todd's charge?
Yeah. Should be able to.
I'm sorry, what did you ask? I'm sorry. Yes, I think there was some newer kind of changes for National Guard.
What I'm saying, they just try to they have that instrument for.
Yep, so with them, usually we can pull them online. And I kind of just try to do that, early on. All right, hopefully this comes back up.
Can VA loans be done to spouses?
Yep.
Even if the veteran's not on it?
No.
It's just surviving spouses. So if the
So
spouse.
if they're still alive, you're screwed?
They have like,
well, dang it.
yeah, they have to be on
That
it.
sounds so bad, I don't read that. I don't read that one
Yes,
at all.
they do have to be on it, and they have to be borrower number 1.
Okay.
Doesn't
There's no way
matter.
to do a VA loan if the veteran says that you can use, I'm a veteran or married, but he, she, whatever, has to be on the loan and borrower 1, spouse or whoever has to be number 2.
Yes.
Okay.
Now, if they're deceased,
there's.
Unless they're deceased, okay.
there's
And not
deceased-
remarried.
Yeah, so there's a lot of caveats to
Okay.
those programs, but yeah, you have to take over the deceased spouse.
A lot of veterans in Indiana, when they're big on, they have money, right? But they do not want to touch it. So they don't want to put any money down. They don't, you have to explain closing costs. Well, you have to put money down to buy a home. That's called escrow. That's $2,000 or $3,000. And a lot of them don't, so a lot of them want that back. A lot of my VA contracts, I write at the bottom plus 4,000, plus 5,000. So the 4,000 or 5,000 that we put down for escrow does not go to closing costs, does not go to whatever down payment. It goes back to the, or I guess it would go to closing costs, but it doesn't go as down payment. So if you write the contract wrong, the escrow will go to the down payment, and you kind of have to separate that. But for some reason, that's a trend. When I talk to VA, they don't want to put any money down. They want to hold, or they don't have it. I'm like, how are you able to buy a $400,000 house, but they have no money? They don't even have the 3%, but they're approved.
Yeah.
They're approved.
Because they're told if you have a VA loan, there's no money down. So
Well-
that's in their mind, there's no money down.
Correct, I mean,
So
and
they're not
that's,
giving you any money. So,
that's where
That's
really
it.
Google, Google becomes the thing that people go to, right? Just like, imagine if you're a doctor with a medical diagnosis,
Yeah.
people coming in, they have to come to someone that studies it and learns it. So even, even you have clients that say, oh, I was approved, let's just say Rocket Mortgage. These online companies, not all of the representatives are licensed, okay? A lot of even the big banks, the loan officer who is, oh, thank you, buddy. The loan officer who's talking to them is only licensed through the bank, okay? They're not someone that's going out and having to stay up with their licenses just like you guys do.
So say that again. So
So some banks, some other big mortgage companies don't always require a loan officer to be licensed.
Chase, Wells Fargo, Bank of America.
Right, so even these big banks, the person that they're speaking with, who's the expert, is
Has
not
no
even
idea.
personally licensed. They haven't had to go in and take courses and read the guidelines and take the exam, which, by the way, is very difficult. The exam is very, very difficult. So just something to keep in mind. That's something where, just yesterday, that pre-qual that I told you I got done in about an hour, the guy had gotten an online approval from the bank. I had never heard of him. And the agent said, well, you're one of so many, right? That's what we hear all the time now. There's 25 contracts in, or offers in. You're not gonna take the one from a bank you've never heard of. That's up in Maine, that's something.com. That's where the sellers really start to look at, are we gonna get into an issue here? Are we gonna be working with the lender? We have the phone number, the person they're dealing with, may not be licensed. Am I making sense?
Mhm.
Any questions, Tiffany?
Yeah, conventional.
Oh, I love this, Aiden. Even has credit scores on here. That's cute. Okay, where were we at? Wow, we haven't gotten past the first slide, guys. Wow.
Sorry, I'll be quiet.
No, please don't be quiet. All right, this actually, hey, Jeff kind of took us to the next
We aren't
thing.
even there.
Look at that. We're actually 2 slides in. Okay, so if you want to write this down.
Can you make it bigger? I can't
I don't know.
Zoom.
Let's see this.
No, you did have me on top before.
Oh.
I just will mess with it.
View.
What do you want us to write down, that FHA,
If you want to write down the
Yeah.
down payment amount.
or down payment amount?
Why can't I get this bigger, guys?
I'm not helping, sorry.
Oh, wait a minute. Oh,
There we go.
Don't confirm power shutdown, that was to fix it. Where is she?
I didn't even touch it button.
I didn't do that.
I was hitting the slide.
It's okay, figure it out.
Is this online with Facebook right now?
Yes, Facebook Live.
Yeah. Okay, there you go. It's on agency one.
There we go. All right. Let's see if we can make it bigger. How's that?
If you click
I think it's in the
slide,
bottom right of your screen, on your computer screen, there's a little slide bar, I think that makes the image big.
Is that too big?
That's better.
so conventional,
Okay.
how about we just say it?
Yeah, let's touch on that. All right, so Annie's Freddie, that's what we talked about before, that had the credit score kind of thing, with the median, Fannie and Freddie. This is for our better credit score clients. Okay, but percentage down. There's programs that allow you to go down to 3% down. Remember with FHA, it's 3.5%. And then we have Fannie and Freddie, who have programs that allow for 3% down. Those are also income-based. Home Ready is a good one if you want to Google it. Okay, Home Ready. It allows for borrowers, not even first-time borrowers to put 3% down. Conventional is also the same platform that you have to take if you're doing an investment property. Okay. Or if you're doing a second home, there are some ways that you can use the government programs, the FHA, things like that, second homes, but almost always going to take them conventional. Has anybody done, nobody's really done a lot of loans yet. Jumbo, that's a whole different category. Okay.
What is?
Jumbo loan. So jumbo loan is basically when you hit above 548, 350 is the max amount allowed to lend in a conventional loan, unless you're in an area where there's a lot higher pricing. Then they allow up to 150% over. I really don't see a lot of that. When they're over 548, 350, most of the time we're going to this platform. Okay.
Are you saying 500, what is 548?
548, 350. 548, 350. That's the max.
What would you go to, FHA after that?
After that, we're probably going to a jumbo. So think about it like this, if they're doing a $600,000 home, and they want to go 20% down, you're not gonna go over that. You won't worry about it. You're putting enough down.
It's the value of the loan, not the value of the house, or the price of the house.
The loan amount.
The loan amount.
Yeah, exactly.
So on a jumbo, how much, percent down do they allow?
They allow different amounts depending on the borrower's credit. I have 4 jumbo products, I think 5, more coming soon. The reason why we have so many is some allow in-house underwriting, we can underwrite it ourselves. Some you have to push out to the investor directly. Okay, so they would service them after closing. They have their own kind of set of rules, each one of them. And we have different ones because they allow for different things, different credit scores, bankruptcy requirements, all of those things. Jumbo rates, if you get into that, jumbo rates are always going to be a bit higher than the other products are. Okay? Not so much because they're any more risky than these other loans that have lower credit scores. They're clearly not riskier. But, you know, after we close, mortgage companies take your policies off. Government policy. Jumbo isn't a different product. Okay, so there's not so many, as many jumbo loans in a pod
It's not people buy them.
as there is Fannie and Freddie and conventional. So that's why the interest rates are higher, not a risk. Okay, and then I know you can't see this, and we talked about this before, but FHA, 580 credit score. Okay, that's really low. Usually if you have somebody coming in with 550, 560, I can increase the credit score in a month or two and get them back to where they need to be. Okay. 3.5% down, if they have score, if they have 10% down, we can work with them.
This is still pretty blurry, isn't it? And then VA, we also talked about that. They can put 0% down, doing 100% loan to value, cash out refinance, and no monthly payments.
For FHA, there's no monthly mortgage insurance.
There is, it's 0.85.
Which one did you say there's no monthly mortgage?
Okay. With conventional, they're pending. They don't have 20% equity built in their mortgage insurance. They could do monthly, they can do it upfront. And if they have 10%, then they can buy out the mortgage insurance. They can put enough money into the game, have mortgage insurance. You know, I was gonna do a thing with question and answers and like throw candy at you, I don't know what happened to candy. But I did wanna kind of do, if you have questions, you wanna sit down with me afterwards, we're gonna send everybody who signed up with cards for Starbucks via text message. All right, Jeff, you have the most questions, you got anything right there? Come on, mid-bite.
What did you say last?
What did I say last? We talked about conventional, mortgage insurance,
The thing I want to
buying
focus,
off, mortgage insurance.
the thing I want to focus on is, I want to win the job. I think of it all the time as interviewing. I'm interviewing for the job. When I'm doing an open house, I'm interviewing for the job. When I'm going on a buyer consultation, and they haven't seen me face to face, I'm interviewing for the job. Every time I meet someone, and they haven't seen me, whether they're after a lead came in, my logo, Zillow, I had a Zillow lead come in, I know you might not know what that is, but you advertise for Zillow, they connect you with the call, it's pricing. But she hasn't seen my face, so I make a video, as soon as I get off the phone, okay, I confirm the appointment, there's no offers on the property, and I'm making a video and I'm sitting there, right? So I'm interviewing for the job. So when I do meet her, and that's just one thing I don't know if it's comfortable video, not comfortable video, but video is where it's at. I don't leave a voicemail, I send a video. No one checks it out. I don't leave a voicemail, I send a video. When I go to her, instead of trying, and the reason I say that is I'm trying to speed up this whole trust thing. So when I talk to her about mortgages, when I talk to her about making decisions, okay, let's make a decision, you're not gonna get to a closing unless they can make a decision. What we're learning today is how we can help them make a decision. So I say, my little packet, have the 4 loans, the one I wish I had, the one I would recommend, right? And just, instead of saying, okay, pick one, why would you do that? You're gonna confuse them. They're leading to you for advice. The one I wish I had was conventional, and I wish I had 20% down, but that's a perfect world. We know that doesn't exist. So if I didn't have 20% down, I would have 10%, and then I could back the PMI, or the PMI would be lower, right? And then I have my mortgage calculator that would work, or Beverly's app, and I'm showing them the difference in payments, right? So my thing would be, let's see if we can get you conventional. How much money do you have to put down? 3%, 5%? That way you don't have to refinance to get rid of the mortgage insurance. And that's why I kind of push conventional, and that's why I want to know the most about it. Now, what you just saying, you know what, this is something new, I guarantee you a lot of other agents don't know, but now we're not going off of the lowest credit score. So if you and your husband, you know, whoever scores lower, you can qualify. A lot of people can't qualify for conventional because they're under 620. I think that's a game changer.
Complete game changer. You want to do a little question? You want to stop and do a little role play, or what are you thinking?
We can, but what else did you want to clear?
Let's see.
Is there more?
I've got a little more here.
Is there anything very important? Because we're at whatever
It's
time.
all very important.
I mean,
All right, let's go over what a pre-approval versus a pre-qualification is. Is that good for you?
Yep.
Okay. Pre-approval. Did you know that I'm not even legally required to have a borrower send me their income or their assets before I can pre-approve? Legally, I can't force them to do documentation. Now, how ridiculous is that? Because all of you are relying on my license and my meeting. I can only rely on the borrower's giving me. Okay, they say I need 20
with, Jeff, here's your pre-approval,
Or pre-qualification,
here's your pre-qualification. Awesome, I got the best client, this is the best one in the bunch. We're gonna get a contract acceptance. Okay, well, now I've got a contract in my hand. Now it's time for me to get the loan application out and signed, and now I need to get all the documentation together from the client. I get it back and face them, show, he makes that, but he, maybe,
10,000 a month in child support.
maybe that, 401k loans, with not enough money to back them up, I mean, you name it.
Boat loan, house loan, car loan.
It all. Okay. Even though I can't force these clients to give me those things, what I can do to them is just, what I like to say, give them the white glove service, and just say, listen, this process is gonna be a lot easier and faster if you can get me that documentation done. You can send me 2 most recent pay stubs, if you can send me your W-2s, you can send me your tax returns. Guess what? If you go out shopping with Jeff this weekend and you find that house of your dreams and you wanna put an offer in, I have everything already ready. I have your income calculated, I've had your assets reviewed, I've had everything kind of prepped and ready to go so
We can close
that
faster.
you can close faster. You may be able to put a 30-day contract on your offer.
21 day, 30 days.
21 day, can't be any less than 10, don't give me 10. It's a leg up on your competition, okay? It's a leg up because I can truly give a pre-qualification.
And that's where the lender stands out, and as you can tell, I've worked with a lot. The lender that has I have a natural skill set, right? And, I can talk without thinking, right? So if the lender has a natural skill set to build this relationship with clients, and they just open the floodgates to give them their information, that's what Beverly's good at. They don't make it hard, because when you buy a house and you go through all this paperwork, that's hard. These people are like, oh my gosh. For us, it might not be that difficult because they see it, but every closing is different. So when they're getting their bank statements, they don't know how to send it. Just took a little bit more into that. But that's the thing, the lender can make it seem seamless, like it's not gonna be overbearing. They're gonna give you the information. But if the lender's like, send me this, and then hangs up on them and doesn't go step by step by step, that's when the borrower calls me and they're like, I'm confused, I don't get this, and then it's just harder to get. You want a pre-approval. Pre-qualification is words.
Yes, it's true, okay. I want to just take a sidestep off of this. What I showed you was that little app that I have, and people can apply. Maybe you know this, Jeff, you know this, Crystal, I remember she knows this. Clients can upload everything to a portal. That's not anything new, lots of banks do that. However, our system is built in place to pick up information that is already gathered about the borrower, okay? We can, with a lot of clients, pull their income information right off of websites like verification systems like Work. Okay, so that's if your employer uses, a payroll system that processes through Work Number and does their verification. I don't even need a pay stub. I don't need the W-2 in a lot of cases. I can use just one little 30-second income verification system and get their pre-qualification done like that, and that has these things. The system, we call it bridge, so it can bridge the gap of how loan processes can take long and be more difficult. Because we can pull that information, including bank statements, right? We can have a client log into the bank right through the portal. It doesn't save the password, doesn't do anything like that, but it gives us the information we need. You guys will learn that bank statements is like the nemesis of lending and everything. So giving the client and the agent the ability to use the system where they can just log in and send the data, accurately, saves the process 7 to 10 days. Okay, so if you're doing a 30-day contract, we're not waiting for the borrower to go to the bank, get all the things that they need, and come back fast to just log in here. It saves time, it's efficient, it's quick, it's easy. Okay. Good? All right, pre-approval is different from pre-qualification. Pre-approval is when an underwriter has actually looked at the file. So that's where I can go in again to the client where I'm saying, hey, listen, you don't have to send me this documentation. If you send me your pay stub, your W-2, your bank statement, I can get your file underwritten with a real underwriter. and then we can give a pre-approval with your offer. It's just one more leg up. So now you have a pre-approval from an underwriter, you've got a 30-day offer for a contract for 21 days, if you wanna do what Jeff does, and you're gonna get a better offer. You may even get an appraisal waiver. We've been dealing with a couple of this lady lately. Right.
You know what that is, appraisal waiver, so you know what that is? No. So starting COVID, I haven't seen it before COVID, but I'm sure it was there.
They're occasionally, not as much.
Make sure I'm saying this right, is it
Yeah.
just 20% down or 50% down?
I mean, there is a basis to how much you're putting down, but it's more about the location of the property. Okay, so if you had a house that somebody purchased and they just have been relocated and now they're gonna sell the house, Fannie and Freddie actually document the values of homes. They keep it tracking in the system. And so they're able to look up and say, you know, we believe that based on this purchase price and but based on our evidence and houses around it, or maybe even physically that house location, what it appraised for in the last couple of years, we believe the value is sufficient and we're not gonna require an appraisal at all. It saves too much money. It saves money and it saves
risk.
us from deals falling through.
And we just had one fall through, and then they went with another lender, got another appraisal, they went with the lender before Beverly, frustrating, but they wanted the house, so that, you know, and they're like, they love Beverly, and then they go back to the other lender, and they're like, oh man, this is 10 times different, just the whole process, but the appraisal, and they got appraisal waiver, they just got it the day before the appraisal, I wrote the contract, doing the appraisal first, so if you didn't know you can do that, you can do that. If you're worried about the appraisal, write the appraisal will be ordered within 72 hours, 48 hours, and Beverly ordered it within 24 hours. So she has to get the things in the system and then they can order it. And then we do the appraisal. The home inspection starts when we get the appraisal back. Does that make sense? We don't do the home inspection and then the appraisal because that we're spending $450 plus $500 for the appraisal. So if you're worried about appraisal, do the appraisal first, get over that, and then do the home inspection. So we did the appraisal, it came back 40,000 under. Very frustrating. We disputed it. I have another appraisal, and you don't have my info. So if you get running, you know, if you want it back for someone, you know, like with a real situation, just call me. But I called my appraisal buddy, who's super conservative. His name is TJ, and he's like, he gave me addresses, and he's like, there shouldn't be an issue. So when he said that, I was like, he's super conservative, so there shouldn't be. So we disputed it, but it didn't do anything. It's a 50-50 chance. Yeah, an appraiser has this much to pick. You know, it literally, if the price is $630, it can appraise it at $580 to $660. And it's up to the appraiser. It's a risk. It's literally, you have no idea how it's gonna go. So that's why I go to the appraisal when it happens. I'm there in person, meeting the person, getting the feel for it. You got a new lender. And guess what the appraisal came back as? 10 grand over the purchase price.
Can you believe that? 50,000.
The first one was 40 under, and we couldn't negotiate with the seller. The second one was 10 over. The point I'm trying to make is that they don't hold them accountable like they hold us.
It's very much a matter of.
So if you get an appraisal waiver, take it.
Take
That,
it.
if Freddie Mac and Fannie Mae are okay, take it. But my customers were like, no, we want to make sure we're not overpaying.
They want.
And now they spend $1,200 to make sure that, you know.
They did. And just because Fannie gives a waiver doesn't mean Freddie's going to give a waiver. Okay, so if we're taking advantage of one,
Because that other lender might use,
yeah.
right?
I mean, yeah, or they just aren't knowledgeable enough to know how to read the automated lender systems.
A lot of them.
Okay, that's a good thing.
Just wanted to say something about pre-qualification and pre-approval. Even when you get offers, because this happened to me recently when I sold my house. I had an offer and it said pre-qualification within a range which our house fell in, but I didn't even consider it because it said pre-qualification. So,
Yeah.
you know, you have to be careful with the wordings, even on the offers, so that you yourself can, you know, determine what is the best offer. Because the offer they gave us was higher than the one we took, but because it said pre-qualification, I just dismissed it.
But what you should do, and this is what I do, because some banks don't, that word is used loosely.
Very loose.
Pre-qualification, pre-approval, I'm trained to think pre-qualification means they didn't run any credit, but Beverly just said they did run credit.
Yeah, you do.
You
run credit.
you're
And
just
it
not
could
seeing
really-
all the,
It could really just be that they ran AUS and their company doesn't mind that you use well, they ran an automated underwriting system. It's an electronic underwrite. It only reads the data that you've given it.
So you call on that, you call and say, wait, if that's a good offer,
Yeah.
research the lender.
Yeah,
and
have
ask.
your, right, the listing agent, if they're getting in 15 offers, they should be looking at, okay, is this person, are they qualified for higher than what they're offering, maybe? We talked about that the other day. Just because that person's qualified for higher doesn't mean they're necessarily gonna offer that amount, but they're qualified for it. You're looking at what kind of loan program, you're doing conventional, oh man, I must have a borrower with a high credit score, right? You're looking at pre-qualified versus pre-qualification. And then a lot of times, right now with this business, I have the seller's agent calling me. Hey, can you tell me a little bit about the client? Can you just, I can't give confidential information out, but I just had one, before my flight, I wanted to know about the actual, the people that were moving in. You know, they consider the offers, like this is a nice young couple, you know, this person and this, and just a little bit, and their offer was selected. Because they had their pre-qualification complete and it didn't meet the
What I use, and this is what I use, the people I team up with, we got Ken's contract approved, $30,000 under contract. I group texted Beverly with Tammy and Jen, those are the two listing agents. When I submitted the offer, I made a video, I had a paragraph to do that. But when I submitted my offer, I included the lender in the email. I think I BCC'd you so you could see it. And I also, Beverly sent me a pre-qualification. I know that not everybody understands that, so I said, Beverly, can you send me a pre-approval, something that says pre-approval? And she did. She's like, you know what? We have enough information on Ken. That's no problem. And I group texted Beverly with the agents, and then Beverly immediately said, hi, my name is Beverly. I'm number one in this business. I can do, you know, I get the job done. Please reach out to me if you have any questions. So utilize the lender to help you get the deal. And then,
it's a collaborative effort.
and they called you. I think
I'm getting it more and more often.
one of them called her, and then they called me and said, we're gonna sign, you know, and I do that every deal, every offer I put in, I group text the listing agent and the lender and me, and I'm like, because that gives her an opportunity to work and get, and help me close the deal.
Right, exactly. So I know that it kind of seems very generalized to have somebody apply online, right? Because we kind of touched on this. But that is not where I need to spend the time qualifying people. They can plug in that information for me. My time is going to be spent really going back and learning, asking questions, getting to know them personally, finding out their goals. When they're filling out this stuff, it's quick, it's easy for me to be able to pull it, and then I'm saving time going back and recollecting information that maybe they forgot to mention to me before. You know, it's just, it's efficient. It's really well.
What's the number one question you want to ask, like you like to get from Laura?
Well, I really like to kind of just get an overhead idea. So I call them, and I ask them actually how they heard about you. How did you meet your agent? Is my first question. A friend referred me, and blah, blah, blah referred me. Good.
Jeff harassed me for 2 years until
And I try to lift the agent up through that relationship. So Nadine, I met Nadine at an open house. Oh, Nadine does great open houses. I'm glad she put in touch with you. I've been with Nadine for a few months now. She does a great service. You're in good hands. So that's just another way to kind of, hey, we're a team here. You know, we're not going to be, because that happens, right? Others are really
Pick sides. No, yeah, that doesn't
you
work.
got to be united here.
Yes,
Completely united.
good point.
So that's one of the first questions I ask.
Sorry.
Your phone, get your phone.
We're texting us.
I also want to know how long they plan on living in my house.
Oh, really?
I do, because I want to know if they're gonna pick up and move, or if they're really just using this as a first house, and, you know, in a year or two, they're gonna turn around and make it an investment property. If they're gonna make it an investment property, they don't necessarily need to go too much down. They wanna get their payment to a place where somebody else is gonna take their payment, and they can save their money for the next house that's gonna be their house. If you have someone that's educated and forward thinking and kind of knows what they want. But really getting to know that client and their goals and their dreams and how long they plan on living there is really important. It really is important. So I really like to just get to know my client. I like to talk about how they like to be corresponded with. Do request text messages, emails, when they call you. It helps me understand what kind of need I'm dealing with, a needy client or a doctor that doesn't answer the phone to talk to. What other questions?
We're about out of time.
I know. There's so much we could go over.
I think we've gone over a lot.
We really have, probably.
Can you show us your mortgage calculator? Because that's one thing I want everybody to see. Or do you want to use, is it like mortgage calculator?
I mean, it's on the app. Yeah, there's so many websites that you can use.
I want to see yours. Do you see it when you do it, or does that save the info for you to see?
This is one of the things I had just kind of pulled up. So we also have, we call him a Loma. Basically, he's an assistant that helps me connect with real estate agents. It helps them co-market. We pick stuff right up off the MLS and market things together. It helps us stay in touch with the same clients. This is a little bit of an older version, but I found it and I thought it was helpful because with this app, you can track the loan, right? So I try to touch base with my agents once a week. So usually on Tuesdays, I'm calling and saying, here's the status updates on all of our files. On Thursday, I'm trying to say, hey, here's who we got pre-qualified. If you're taking anybody shopping this week and you need an updated pre-approval, please let me know. That way you're not calling me on Sunday morning while I'm heading to church asking me pre-qual. On here, you can calculate the PITI. Okay, that's principal, interest, taxes, and insurance.
Can you click on that?
Mm-mm.
Can you show us that? Are
I
you able-
cannot, but I'm gonna put the app on everybody's phone.
Yes.
Okay. It's shareable. You can read. Oh, look, there's a little home search thing where they can also see properties that are available. I think you can too. And here it is.
So that,
Sales price, down payment,
what is it,
mortgage
mortgage
term.
term, interest rate?
30
So
years. It typically is mostly 30 years.
does it have the PMI on there?
It does not.
Okay, can we pull up mortgagecalculator.org?
Mhm.
Can you text me that? So, can I, okay, so
Here we go.
can I show this, or can I do it?
Can you do it or we do it?
Or you do it, okay.
Yeah.
So when I'm at an open house, Nadine, Crystal, then, and y'all too, when I'm meeting with the buyer, my laptop's up, it's hooked up to my hotspot, right? That's a big deal. Nadine's like, why do you have your laptop? Why do you have your iPad? Well, she doesn't have that anymore. You know, the value, toolbox. That's one of my tools. So I pull this up and I'm like, hey, how much do you want to spend a month? They're like, so let's say Beverly's the buyer.
All right.
Good
so
day.
We're closing in
Nice to
December.
meet you.
Mhm.
Awesome jacket. How much do you want to spend a month?
Oh, I think it'd be good about 2,500.
Let's say she doesn't know. How much do you want to spend a month?
I don't know. My rent's 1,200.
Just say I don't know.
I don't know.
Okay, are you renting or do you own a house?
Rent,
How much do you pay for rent?
1,200.
The next question I want you to ask is, when does your lease expire? That's a big deal. Okay, that's going to tell you the urgency. So how much do you spend? Do you spend $1,200?
1,200.
Okay. Is that your max, or are you able to spend a little bit more?
I'm able to spend more. This is a start.
Startup, so let's say 1,600, 1,700. Okay, so now we should know how to do this, so you need to practice this. So now remember, she's at an open house or we're at a house. The house that we're at is 350, so go ahead and put 350 in there. And then, like I said, when someone says they don't know, I'm jumping up and down because I'm gonna walk them through it and they're gonna walk away feeling like they accomplished something. So I'm gonna say, how much, I'm gonna ask her and she's gonna say, I don't know. How much do you have to put down?
Oh, I don't know. I've got some money saved. I just don't.
You just
don't
don't
really
know. So what she's telling us is she needs advice on which direction to go. I don't know. That's what that means. So I'm going to say you have closing cost, you have down payment, and you have closing cost, right? You have down payment and you have closing cost because she might not know that there's both of those. So I'm going to say, do you have 5%? 5% of 350 is what? Like 12 grand or something like that. So I'm going to say, how about we try 5%? So I put 5% in there.
Okay, so then there's a little percentage mark
Yep,
here.
there's a percentage mark there, and I put 5%, and then I go down to the interest rate and I put 3.1, sorry, I put 3.1. So I put 3.1 in the interest rate.
Now, see, I usually do 3.5.
What's 3.5?
3.5% interest rate.
3.5?
Yeah,
Go ahead.
That's my general number. That's where I start.
And that's what I'm gonna start doing now. I was doing that wrong. This actually runs a little lean. This runs a little lean. And then I'm gonna go down. So this is my bulk information. This is what I need to get from the borrower. I'm gonna keep that the same. Now, we know property taxes are at least 1%, 1.251%. So it's 350,000. I'm gonna put $3,700 for property taxes. I'm gonna put $3,700 for property taxes. Now, I want them to go conventional. I know FHA is 0.85, we wrote that down. They're putting 5% down. Now Beverly's gonna have to see, she's gonna help me make this decision. Beverly, if they put 5% down, is their PMI gonna stay at 0.85 or is it gonna go down?
I always run different calculators. So I have 5 different mortgage insurance companies that I use. I run all of them. There's also different options. You can do, I don't know if you know this, you can do monthly and a lump sum
To buy it out or?
to help buy it out and do both. So you pay down more upfront and have less. There's
In your closing
a
costs.
ton of different
In your closing costs, you put more closing costs down.
I still have a smaller mortgage.
So just, how about we're trying to go conventional, it's 5%, would it still be 0.85 or can I get away with 0.75?
You can get away with less.
So does that, you see what I did there? So I know FHA is 3.5. So if I put 3.5 there, I have to put 0.85. But if I put 5% there, that PMI goes down a little bit. 99% of agents have no idea, right? So you're showing them this. So we're gonna do 0.75, homeowner's insurance. How much is homeowner's insurance for a $350,000 home? Do you know? Yearly,
3,000, 3,500.
1,800. You want a good insurance agent. You're gonna do a wind mitigation to make sure you get the wind mitigation discount, but your homeowner's insurance is around. And I ask that because I want you to tell me, we want to do this right. That's why we're doing it together. If you put $3,500 there, that's gonna make this payment high. And then they're gonna, then we're actually losing the amount of house we can buy because we messed up with the taxes and the homeowner's insurance. So my homeowner's insurance is like $1,900 and I have to do it. So I never really, for $350,000, I never put more than $2,000. And I have an amazing homeowner's insurance. Just work chat me, text me, and I'll send you this info. So we're gonna go ahead with $1,800 there. I don't do anything with the HOA. I leave that blank. That's normally outside the mortgage payment. It's normally not included.
It is never included. However, you should take into account the property location. Okay? If you are dealing with a condo
And you know there's an HOA fee.
and you're having a $280 a month payment, your homeowner's insurance is not going to be very much a month because most of the time with the condo insurance, they're covering walls in. They're going to cover the whole building. And the only thing they're required in terms of lending is to cover their personal property, other stuff inside the home, and any betterment. So any adjustments that they've made inside the home structurally or physically to the home, you want their insurance policy to cover.
So
it is kind of important. My last homeowners association for my house was over $300 a month. That makes a big difference with the property.
and depending what I'm doing, if it's a townhome, I'm gonna put it in there, but if it's $1,000 a year homeowners association, so make that decision. So what I'm trying to do is I'm just trying to get to that number. So go ahead and click down.
Here?
Calculate. And then go ahead and scroll down. And then, so my payment is $2,158. My PMI is $207. In that payment, that's how much the PMI is. The reason why I'm showing you this is because now all that conversation I had about buying down the PMI, trying to eliminate the PMI, trying to get rid of this PMI, now they're seeing, oh my God, once I get rid of that, my payment's gonna go down $200. And no one told me this when I bought my house. So then I bring my little personal story in and say the reason why I really focus on this is I don't want to happen to you what happened to me. I want to make sure of that. So now that we know that our budget is $1,700, okay, now we can really get to work because our job is to provide answers and information for them to make a decision on. So now I'm going to go back up to the purchase price. And I'm gonna put in, you know what? Let's see what purchase price we need to stay in that number. And at that time, they're gonna say, you know what, I can put more money down, or I can't put more money down. So I'm gonna, so yeah, you can do 250, you know, let's see what 250,000 looks like. Calculate, and now we're gonna come down, and now we're right in that number. And now we're right in that number, right? So now it's hard to find something for 250,000, but now we're gonna think, you know what, let's see if I can spend $2,000 a month. If we can spend $2,000 a month, then you can really get something done. Or even if you have a family member or a friend that has money they can gift you, then you can put more money down. But the more money that you put down doesn't change that dramatically. What changes that dramatically is the PMI. Once you get rid of this, or get that lower, like a USDA loan, 0.25, go ahead and put 0.25 in there. Put 0.25 in there.
It makes a big difference, guys. Same thing with the interest rate. So if we have more time to get their credit score increased to help lower mortgage insurance or lower their interest rate, it makes a dramatic difference in their monthly payment. Actually, more of a difference than your purchase price. Unless you have a big adjusted purchase price, that's squeezed out over a 30-year period doesn't make a big change in that monthly payment. Mortgage insurance and interest rate.
Does that make sense? Go ahead.
Jeff, 2 questions.
Yes.
So if you're at an open house and you're doing this in front of the customer, how do you have any idea what the homeowner's insurance is gonna be? Is it average based on the price? Is it more? If the house is more than what you're using here?
That's a good question. I base off of the last 50 closings I had on how much their insurance is. That's why I'm involved in homeowners insurance. I'm sending them to my homeowners insurance agent. A lot of lenders have an insurance person, they just fit into that number. They're like, okay, give me a rate so they can give a payment. I get the actual number. Having done this so much, I know my insurance is gonna be between $1,200 to $2,000. $2,200 is gonna be pretty high, unless they want higher coverage. So when I do this, this is just getting us to a baseline.
Okay.
And then when we find the house they want, during the inspection period, during the time of getting the offer accepted, as soon as we get it accepted, their group text with Greg, his name is Greg, with the insurance guy, hi, Jeff, buyers, pull up the red carpet, address, get to work. He's like, do. He calls them, asks them all the questions. Now, when the insurance person talks to them, he's gonna ask them how old the roof is. He's gonna ask them how old the water is, water heater, how old the AC is. So you need to be prepared to be able to help the clients answer that question. Or you tell him to ask you, and that's what he does. Or when you text him, you say roof is this, AC is this, water heater is this, and then you're helping him streamline that payment. My goal, what I tell people, and what I teach agents to do, is I will assist you and guide you to get you the lowest mortgage payment by providing you the best lender with the lowest rate and finding the best homeowners insurance, because in return, you're gonna get the lowest payment. So what I say is, my goal is to make sure I give you the lowest mortgage payment. That is what I'm here for. That's why you have me. My value to you is to make sure you make the best decision on that. I'm not gonna let you make a decision that I would make myself. I'm gonna give you the best lender that's gonna provide the best interest rate, and the service is gonna be top notch, and we're gonna make sure we have every option to get rid of that if you have extra money. And I'm gonna make sure the homeowner's insurance isn't a joke either, because there's homeowner's insurance companies out there that will give you a rate without water coverage, because they're in a state that don't need it. We have airplanes, we need it. If you have poly piping, the gray piping, you know what poly is, the gray piping? But, you know, anybody else, you know, copper is, USPVC, PEX, okay, so poly, P-O-L-L-Y, that was done between 81 to 95. Homeowners insurance will not give coverage for that service. You can get homeowners insurance, you can still close the loan because it's enough for the lender and the underwriter to, whatever that word is, seal it or whatever. But that you need water coverage because we're in Florida, we have hurricanes. So that's something to negotiate. That's what I'm kind of getting off task. But then again, you know, you're providing value. Does anybody know what poly is, the plumbing? Okay, so Sweetwater, you know where Sweetwater West is? That gated subdivision, every house in that subdivision has poly. So again, work chat me, find my number, you got my number. I think are you all in the Seminole group? Are you all in the Seminole Messenger group? You are, no? How did you hear about this? Facebook or agents who went?
Todd,
Todd told you? Okay.
Yeah.
Are you on Todd's, you're not on Todd's team, are you?
as of today, I would be.
Oh, okay, so you're on Todd's team. Oh, good.
So I'm like new, but
Okay.
but I'm not
Todd told
new
you to
to-
come, okay.
yeah,
So,
he just told me, yeah, I met here with him last night. And, told him I was gonna be signing up today, and I said, but he said, well, we have a training tomorrow morning if you wanna come,
You
so
do a
that's
lot.
kind of how.
Me and then, are you in, what
Agents one.
agency one? And then
He's my mentor.
through EXP,
Through EXP.
he's a mentor on EXP. Oh, I'm sure I didn't know he was doing that. Okay, so
Your sponsor.
he's,
More than that, sponsored.
oh, okay, so are you on Daniel Bencore's team? Or his downline, his group? Okay, cool. Okay, so just I thought, okay, so what I'm trying to make is plumbing's a big deal. You gotta get on your hands and knees, you gotta look underneath the sink to make sure it's not gray. If it's gray, like these look gray, dark gray. If it's gray, that's poly. Take your phone, take your flashlight, and you're showing value. They're seeing you get on your hands and knees. They all, like, what are you doing? I'm making sure it doesn't have poly. Oh, I didn't know that, so.
So if it has poly, what?
The insurance company will not give you homeowners insurance for water coverage. If it has the wrong plumbing, poly is the wrong plumbing. There's a lot of lawsuits, they used to burst, enough homes flooded, so they won't give coverage anymore. Poly is the wrong.
Who think that they have like my homeowner's insurance right now?
You could have poly.
I could have poly and I think I'm covered for.
No, this is for new, So back in 2015, 2016, they changed this. So these homeowners that had it when they bought the house in 2010, and they have poly, and there's homeowners insurance already on the house, but if they were able to get new homeowners insurance, they would make them replumb it. The law changed in 2015. Because that house has homeowners insurance. The seller's like, why do I need to do it? My homeowner insurance doesn't care. Well, as soon as you change, they will. A new one. And what I preach is health, safety, health, safety, health, safety. I don't want mold. I don't want something to burst in the walls. So my job is to make sure we find anything that's going to cause that. And poly can cause you not to get homeowners insurance. I'm extremely good at negotiating inspection report, whether I'm on the buyer side or seller side, just because I'm able to break down health and safety. This is why we're asking. If we can't get homeowners insurance for it, the seller has to fix it. If you have a septic tank, you need to do a septic tank inspection. If you have a septic tank, you need to do a septic tank inspection. Do not go through that inspection period without doing a septic tank inspection. And that drain field, if that thing happens to break in a year, they're gonna come back and sing you, or they're gonna come back and try it. And I've made that mistake. I didn't know I had a septic tank, but I guess I did, And in my booklet, I gave this a septic tank inspection, so septic tanks, so I don't want to come off the talk and run you through what to do during a home inspection. But back to the insurance, depending how old the roof is, depending some of that, it's gonna depend that rate. So just give or take 18, 2000, 18, if you're not sure, put 2000. You should.
How about flood insurance? Additional cost for someone tight, we have one covered.
Flood insurance is extra.
Correct, it's a different carrier, and it could be either 5,000 a year, that's crazy high, that puts them out of their debt to income.
Correct. So look at, you need to be
Yep.
looking and seeing if it's in a flood zone, for sure, especially if we're dealing with somebody really tight debt to income. So we just had one with Crystal, and the amount of house she wants to buy for what she can afford, we're pre-looking at these types of.
Yeah, it's literally like, we're gonna be teeth, right there.
There's a little bit on Wakila Hills that has needs flood insurance, but that's something to look at in the listing, and that's something that has to listing, you're supposed to put in there, needs flood insurance, so going in it needs flood insurance. But if you're insured, that's the listing, this is required flood insurance, because the lender's gonna ask you and rely on you telling them. So don't get to the closing table, and then the underwriter's like, hey, this requires flood insurance, because it went all that way, because the underwriter's gonna catch it.
We do pull flood certs
Yeah, the
pretty
underwriter-
early on. And there are lots of times where I've seen where it's a property where the actual physical home is not in the flood zone, but
Yeah.
maybe the shed is.
Yeah,
Or maybe the deck is. Yeah, you name it.
and they require that a little bit.
So it's attention, I like to say it's a lot of little puzzle pieces that all have to come together, just so, it's really good. So it's good to be knowledgeable, and adjust, getting this coordinated. Okay, you done with the sheet?
Yeah, that makes sense.
Yeah.
That makes sense. And I'm gonna, if you work chat me,
I'll make a quick point real quick.
Yeah.
I will say at the last open house that I just did, I remember him telling me this, not just because he's my husband, but because I actually pulled this up for a client that her daughter's looking at homes that are 400,000 to 600,000, but they don't want to spend a certain amount. And so being able to talk to the mom who's trying to help her search out stuff, the mom's like, well, what she doesn't know is we're going to give her $100,000 or $200,000 to put towards the house as a gift. So
How much?
$100,000 to $200,000. Her dad like passed away, and so like this is something, but she doesn't know it. So, she's like, so can you put this in there, because we're gonna do this for her. So then that instantly for me, like, well, then that can change the name with exactly what she's wanting to do. And I also have to remind her too, like when you look at this, as I tell people is, if you're approved for, $400,000, it could be like, depending on your area and your taxes and your HOA and all that, like that $400,000, the monthly payment is totally different.
And that homeowners association, because we're talking about, it could be high, it could be low. It's not ever gonna be built into their monthly payment, even though when they get their documents, it looks like it is. Okay, because we have to count that as an expense that goes into the house, that is part of their debt to income, okay? But that's always gonna be something that they pay separate, whether it's a condo, homeowners association, anything like that. So if you ever get a question, I thought homeowners association wasn't included, it's not, but it is to calculate your income.
For financing purposes, if somebody gets gifted $100,000 down payment, does it change the loan application approval process versus if it does?
100%.
Okay.
And there's a lot of rules that go into gifts. They all depend on the loan program that you're being used. Okay. With FHA is the strictest with the gifts. You have to prove the connection with the client. Okay. Who's gifting the money? Only certain individuals are allowed to gift the money. And believe it or not, I kind of tease about this, but Mark Zuckerberg will have probably a connection with your gift and your client. Okay. We are allowed to go on Facebook and look up the connection.
Oh, okay, I was like, what do you mean? I was
a little confused.
like, how can he connect me?
Mark Zuckerberg's got a hand in your client's life.
Because they're looking at Facebook.
You're looking at
Make sure
Facebook
that
relations.
person is
Yeah,
Did you
100%. More so than even receipts and things. Oh, are they Facebook engaged? Well, here's
Are they official on
Are
Facebook?
they official on Facebook? Yeah.
Just two things. Write this down. FHA, max loans 356. I think Beverly said it, I just want to repeat it. FHA, because for my team, remember this was like supposed to be separate, we're focused on just for my people, but and now it's, we're making a big, so FHA 356. So it's like, what loan should I tell them? You're not telling them to pick a particular one. You're just saying, we got to figure out what the best option is for you. And this is what some of the options are. And then I prep them to hand them to Beverly. I just save Beverly a lot of time and a lot, so now she can jumpstart her job. And we just build all that value. When I started doing this and I didn't have anything with the loan process, I just, let's call the lender. And here we go again. Depending who the person is, depends how good they're gonna open the floodgates to give the information. They see me face to face, they see you face to face, they trust you. The person on the phone, for some reason, they don't wanna tell them anything. They didn't tell them that they're gonna put extra money down. They didn't tell them that they had money in the pillowcase. They didn't tell them any of this. So that's why I don't do that. I say, let's figure this out together, and then I prep the lender. So the lender, because they might not tell her everything, they might forget it or something like that. So FHA 356, if we're looking at a $500,000 home, that has to be conventional. If we're looking at Sandra with the A, not the O, the A.
Beverly knows.
They want to spend 410, but they're only FHA approved. I don't know why. I can't figure out why. They're trying to get it conventional, but she has 80,000 and 60,000. So that money can go over the purchase price, correct, and still count as their down payment, right?
Yeah, but keep in mind that FHA also is different depending on county. You have
The loan amount?
You have different loan amounts depending on county.
It's more than 356, so it's lower than
It's
356.
higher and lower. So like in Delaware, we have 3 counties for the whole state. They're different in each county.
I think Seminole and Orange are the same. I haven't
Probably, I mean, it seems like you focus on
Just
those two.
356.
Right, so 356, that's an important number for you guys to remember. But if you're ever kind of growing outside of just this area, just look it up. FHA County women.
Yeah.
I know we're kind of at the,
The other question that I had, you talked a couple of times about getting rid of the PMI. Is the only way to do that is putting a larger down payment?
So that's the easiest and fastest way is for the down payment of either 10% and buy it out, so you have a higher closing cost. Okay, they can put 20% down and have their mortgage insurance. Or like we're showing you up here, after 70 months, you could drop off. But with FHA, it doesn't just drop off.
did that answer your question?
Yeah.
Okay, so if they have 10%, and I know they have 10%, a flag goes up in my head, and I'm like, hey, we might be able to buy out the PMI. But Beverly might say, you know what, Jeff? Why do you want to spend $3,000 or $4,000 because it's 1% of the loan? It's at least 1% of the loan. Why do you want to do that when the PMI is only 360?
It's nothing.
So I'm the specialist professional, right? So, you know, it might not make sense. It might not be worth the extra money because within a year and a half, that $60 is going to drop off. The way that the loan is made, it does drop off automatically with the conventional, but you can call in and say, do an appraisal, my house has went up in value, you know, see if the PMI can drop off.
Right, and
The
especially in
PMI
this market.
PMI drops off, or what is it?
It depends on the loan program, but
Okay.
basically the value of your home. So, yeah, that's another place, even though interest rates are low and they move up low for a little bit now. If you're keeping in touch with your clients and maybe they have mortgage insurance, possibly their appraised value, the value of their home has gone up. That's a way you can keep in contact with your prior clients. An excuse to call them, if you will, if you ever need an excuse. Hey, I was looking at your value of your property, and I think you might want to refinance or to calling and seeing if you can get that relationship. You're servicing the client even after the sale, and that's how you pick up your clients.
100%, and that's why we're learning more, and that's why we team up with people that are teaching us. The most successful realtor is the king on, what did you say that could be used as? Something to say to them, say that again? Something that, this is a reason to follow up with them?
If you need a reason to follow
If
up
you
with
need-
them, that is.
To refinance.
The person that's most successful in this, and I'm really good at this, and me and Nadine, you know, we talk about it every day, is a mastermind at coming up with ways to follow up with clients without pushing them in a corner, without asking them to say yes or no. You're just enlightening their day. We're entertainers. I'm entertaining you until I'm top of mind. I'm entertaining you until you're ready to do something. But if I don't keep entertaining you, if I don't keep adding value, if I don't keep staying in your, you know, in-person, you know, if I don't keep following up with you, if I don't keep posting stuff on social media, stories, posts, and you don't keep seeing me, when that time comes, you're gonna see someone else. And you're gonna, even if I did it for a year, then I stopped. So anything I can get my hands on that is light, fluffy, valuable, I can follow up with the client on, I do it, you know?
And that's where we can do co-marketing too. Like Jeff and I were kind of talking about this co-branding and co-marketing thing. I have a whole team that does email things, mailers, all kind of stuff constantly to stay top of mind with the client, has your information, has my information. Even something as simple, there was like National Dog Day, I think, last month, that emails went out to my client. Did you get that email?
No, you made one.
I made one for us.
You made
Well,
one.
there
But I
was
got
another
that
day that
email
was
from you.
National Work Like a Dog Day, that was like the week after. And so then, you know, I told the social media, so I created, like, I took like a dog and then put like his head on it.
Yeah.
I didn't see that. Okay.
You know, but it's funny because I'll tell you, and it's the truth. And this is honest to God, because we just went under contract with somebody on Friday. This is somebody who we sent emails like that to all the time.
A year.
For
or
8 months.
8 months, yeah.
Emails like that, texted, I called her, she didn't respond to anything. I would see she would open stuff here and there, but nothing. And I just stayed on it for 8 months.
And the CRM.
I mean,
And your
in our CRM, and there's some automated stuff, but there's certain things, you know, you put out too. And always leaving voicemails, sending videos, and then all of a sudden, out of nowhere, she emails me and says, hey, my landlord says that he wants to sell our house, and so I have to move now.
We were
And I
repelled
was
married.
like,
We were
How
her
can I
down there.
call you?
She was gonna sign a lease to an apartment complex
Yep.
that she didn't want. Her husband had a stroke. That's the thing, you don't know the stories.
Yeah, she had
And-
money down before, then her husband had a stroke, and that's why she couldn't respond, because she's helping her husband recover. All those things, and I didn't know that
No.
until I got on the phone with her. So you never know what they're going through. And then here she is, because we've been constantly staying on top of it. And she emailed me, and I was like, what do you want me to call?
Now, she can't buy a house. She's not able to buy a house, but there's a program called Home Partners that's gonna buy the house for her. So we still
And
get
rent it
paid
out.
as if she does, and then she has up to 5 years to rent it. She has up to 5 years to rent it. So, and she cried, Crystal, the house that I found her, the house that I sent her, because I'm trying to stay within her rent, it's like 2,100.
Yeah.
Come to find out, she lives right down the road from it. Come to
She
find
drove
out,
past this house every day, saw the sign in the front yard for sale.
saw them getting renovated.
Always said, I wish I could own that
I
home, it
wish-
was never owned a home. And so when we were able to, with this program, get them to buy the home and let her live in it and rent it for up to 5 years, that's what she
And
has to
then-
be able to buy it. And, or she could just keep renting it from them, but she was like crying her eyes out, she's like, I can't believe it.
Yeah.
And see, and that's all consistency, it all started with constantly making sure that we were on top of her mind.
Yeah.
So when this happened, we were
First thing
there.
she thought it was you.
It made such a difference.
For me, both of us, yeah.
Shh,
My pictures and everything. That, I really like it. As long as they like us, they like what we do. When Beverly, the first thing that hit my mind when you showed me that median interest rate thing or credit score, the first thing I thought of was how many people am I gonna call and let them know if you didn't know that on my buyers, my database, my clients. That's the first thing I thought of. I got something to say today, and this is what I'm gonna say. I got a video to make, and I'm gonna say, guess what? Laws have changed. Because how many clients do we have that aren't there yet? That their credit's not there yet? You know, so this is a way for me to stay in contact with them, and I wouldn't have learned it unless I came here.
So always something, one or two things to pick up on this. One or two things.
I think I'm done, Beverly.
I think I'm done too, I think my son's done.
Yeah, we're.
He's on a candy
He
spree over
is.
there.
Any other questions?
Thank you so much.
What is the name of your app for the mortgage?
I'm gonna come around and scan.
Teach them young.
That's right. So my company is around the country. We just hit 18 years with Fannie and Freddie, PreApproval. It started with 2 guys and kind of grew from there. I manage 8 branches. We see 8 branches, and so that's kind of where I've learned from a lot of mistakes. I've learned how to do this process.
When I team up with people, I don't team up with the loan officer, I team up with the owner. So when I talk to my clients and I say I have a lender, I just don't have a lender that's a loan officer at Rocket Mortgage or Quicken Loans. I think Quicken Loans actually, or whatever, right? Mortgage company. You're dealing directly with someone that is above them that has the opportunity to give money that they might not be able to give to buy down the rate. Or someone that can make bigger decisions. So like,